Well, hello. So, this is a quick review on the trade I had yesterday during the London session on the Gbpusd. So, basically, as you can see, price has been breaking market structures. We had a break of market structure right here. Price went back up about 62%, and then price blocked this market structure. This swing low was broken, and we expected price to come back, and we did about 79%. Like I had mentioned earlier, whenever there is a break in market structure, we expect price to come back. Okay, we expect price to come back to at least 62%. You need to look for an area of value, whichever it is you look for, whether it is the order block or the fair value gap, the imbalance, whichever you look for in this area. Then you look for um, a break in market structure on the lower time frame for entry confirmations to take it higher. Okay, so now this is the same thing. This is the same scenario on the GBPUSD on the daily time frame. Now we switch to H4. Okay, you can see H4 came to this area. There is a gap in here. Let me zoom in. We have this gap, we have this order block before this market structure, before this swing low was broken. Price comes back up, when goes through the gap, touches the order block, and we start the bearish move. This high you see was the previous week's high that price broke. We switch to H1. Let me go back to H4. So now you see price has been breaking all these structures. Okay, the structure, these swing lows, this swing low broken. That means we are in a bearish market, and our interests are to look for sales. Now, once price broke this swing low, I was expecting price to come back up, and I look for premium areas. If I'm looking for sales, I'm looking for trades that are into this zone. Anything above 62%, I don't take anything that is below 50% level, and that is why you don't see any 50% fib level on my extension. As you can see, it is not there. So let me put it back up. So from the swing high to the swing low, this is sell side liquidity. I turn to H1. All right, now this is the H1, and this is 62% and 70%. Now, why wasn't I looking for sell orders right here? Because even though we have this imbalance right here, okay, you don't, I personally don't look for any positions based on imbalance alone. Okay, I need imbalance, I need an order block or a breaker, whichever it is. However, uh, imbalance is not itself, it cannot be a confirmation for entry or making positions. um, So I wanted price to come into this zone between 70% and 62%, also touching this order block. So we have this order block right here. Now let's count together the confirmations I have. We have one, a break in market structure right here. Price comes to mitigate all this area. Price goes into consolidation. Probably this is Asian session. And then we see with so much momentum, this was news, I think it was NFP, if I remember. And then we break this market structure. And then slowly the market is going back up to rebalance all these imbalances. And then price has to mitigate this order block. It has to touch the order block, the last upside candle before the bearish move. So now that is one. We have imbalance, that is two. We have the order block, that is three. And then we have four, the sell side liquidity. This is a liquidity pool that price, the algorithm has to go through. Okay, so that is about 4 or 5 confirmations. But do we look for sell confirmations here? No, because price has to go up to touch this order block to go into this area. So now what I was waiting for was price to come into here. So let's keep going. I'm still not interested. Not interested. There we go. We just touched it. So now we go to M15. You can either go to M15 or M5. Let me go to M5 to confirm an entry. So let's see if we can get something. Let's go to M2. Okay. Now on M2, let me go to M1. All right. So on M1, first of all, we have this this gap. Can you see it? We have this gap. We have this short-term break of market structure. Okay, so that is 1, 2, and 3. So we open sell orders right here, and our stop goes above this area. Why not above this area? Because if it truly smart money is interested in selling right here, then there will be no need for them to drive price above this level. If I'm taken out here, it means the algorithm still needs to drive the market higher. As simple as that. So the minimum I take is about 10 pips. So let's go to 10. Yeah, that's 10 pips. And what is my target? My target is these lows. However, I don't have to wait until price takes out the lows. Whenever I'm happy with the profits, that is my rule. That's how I trade. I don't always wait for price to hit my TP levels. Whenever I am happy with my profits, I'm out. Okay, so we got back to M5. Let's see. Right here, almost, were we almost taken out? No, not at all. So let's go. Let's see there. And now right here, let me show you something. Right here, there is a second entry. Okay, let me remove this. We have another break of structure right here, and price returns to it. So if you had missed this entry right here, you could enter on the second entry that price has provided, as price came back to touch this order block. Now let me switch to M15. Let's see how much pips the price was able to deliver. We have that. All right. Now by this time I was already out, because if you check at the time down here, this was midnight, and midnight, that means London session has closed, New York session has closed according to my time, finish time. So I have no idea with where you are, but at this time I'm no longer interested in holding my positions, because I'm not a swing trader, I'm a day trader. So if I were to calculate where my entry was done from here to here, that was easy 60 pips. Now I was also believing that price has to continue down until we take out this swing low, of which we could see it happening either today or tomorrow. But I'm still bearish on the GBP and the Euro USD, because I'm still bullish on on the the DXY. So this is how I took the trade. Just to summarize, I verified that price was bearish because it's breaking swing lows. Price returns to this order block. We go to lower time frame to look for entry, of which we got on M2. Now MT4 doesn't have M2. However, when you go to M1 on MT4, basically M1 and M2 are almost similar. There isn't so much a big difference, but yeah, but I wish they had M2, but it's not a big deal. So when you see a setup on M2, you can confidently enter on M1. So from here, took profit here, and that was it. So I hope this has helped you. This is the simplest way to trade, guys. This is the simplest way to trade. I have about two models that I use to trade, but so far this is the simplest and the most rewarding way to trade. Easy as that. So that was it for today. And guys, if you could help me, um I mean, let's share the videos, let's share the video, let's share, also share the Instagram account. Whoever you think would be interested to learn from the few posts I make on the Instagram, as well as these reviews I'm making on YouTube. It's a new thing that I'm starting now. Share with them so that they could also benefit. And if you're watching this, you haven't subscribed, uh, try to do it. I mean, you don't even have to try to do it. Do it. Do it. All right. Cheers. Stay safe.